What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about one of my favorite stocks in the stock market right now, and that is Alibaba. And Alibaba tends to get a very bad rep. So what we are going to do in this video is we are going to go over all of the underlying metrics in the business that I think are important to remember as an investor. Keep in mind that I do own this company, so take that with a grain of salt. Make sure you are doing your own research, looking into these companies on your own, and making a decision as to whether these are right for your portfolio and your time frame. So I hope you enjoyed the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Alibaba is a stock that goes through a lot of volatility. We can see here over the last month, the stock is down over 11%. Over the last 6 months, we can see even more of that volatility. The stock bottomed out in October around $63 and then went up almost 90% to around $120. And then since then, it's actually dropped another 30% back down to where it's sitting at right now of around $83.65. If we zoom out a year, we can see that that volatility trend kind of continues. There's a move here and then another move up, and then actually from this high of around 120 down to this low of $63, we can see that again, that's another 50% move. So just over, an 8-month period, the stock went down almost a 50% and then went back up around 90% just to get back to this 120 level. So again, just a tremendous amount of volatility from the stock. And then if we look over the last 5 years, the stock is still down around 55% from where it was at 5 years ago. And it actually has a high here over the last 5 years of around $310 and a low if we look around that $63 mark. When looking at a stock that's going through a lot of volatility like Alibaba, it's important to keep in mind what's actually happening with the underlying metrics of the business. What's going on with revenue? What's going on with EPS? What's going on with the balance sheet? And is the company issuing more shares out to investors? Those are a lot of important metrics to keep an eye on. And then also the question is, what is going on with investor sentiment? Is this just a short-term issue that the business is going through that is affecting investor sentiment in a very negative way that's driving the stock price down? And what I wanted to do is actually look at the underlying business metrics for Alibaba. So the first one we have up here is their balance sheet on Yahoo Finance. We could see their current assets and their current liabilities. What I want you to keep in mind about these numbers is, one, they are all in thousands. So you need to multiply each of these numbers by 1,000 to get their actual number. And then two, they are in Chinese yuan. So you'd have to convert them to USD. But what's important for our instance is looking at the ratio between these two. So the current assets for Alibaba is sitting at 638 million or 638 billion if you convert to thousands, and their current liabilities are sitting at 383 billion. So what we can do is we can basically look at the ratio between assets to liabilities, and we get a number of around 1.6 to 1.7, kind of somewhere around there. And for a balance sheet, that is a very strong position. Anywhere about around 1.5 to 2 is very strong, and then anything above 2, you're really starting to get to very world-class type balance sheets. And just to prove that point, here we have Alphabet. So they are known for having one of the best balance sheets in the world. And we can see again, their current assets is sitting around 164, almost $165 billion. And then their current liabilities is sitting around $69 billion. And if we look at that ratio, that actually comes out to around a 2.3 to 2.4. So again, they have a very, very good balance sheet, but Alibaba is still, not too far behind them. Everyone likes to compare Alibaba to Amazon. So here we have Amazon's balance sheet, and we can see that they are actually sitting below a 1 ratio of assets to liabilities. Their current assets right now are sitting at $146.7 billion. Their current liabilities are sitting around $155.3 billion. So this comes out to around a 0.95 asset to liability ratio. When we look at their earnings, they have seen a lot of volatility over the last couple of years. We can see kind of with the start of 2020 and everything that went on during the year of 2020, there was a lot of volatility. Earnings dropped in a very significant way down to 5 cents for that first quarter of 2020. And then we saw it kind of ramp back up. China put in a lot of restrictions, and we've really seen that volatility just continue over the last couple of years. And that's obviously scared off a lot of investors. When we look also at their trailing 12-month EPS, we can see that that has also fallen over the last couple of years. Again, with a lot of these lockdowns in China, we've seen basically a whole economies opening and closing throughout China that has sent their earnings, all over the place over the last year. So the question is really what's going to happen going forward. And a lot of analysts are actually predicting a fairly healthy bounce back. We can see here there are 24 analysts on Yahoo Finance covering 2023, and there are 30 analysts covering 2024, and they have an average estimate for 2023 of $7.82, and that jumps up by over $1 for 2024 to $8.80 $2.85. The low estimates are actually low and continue to go lower in 2024. So there is still a lot of bearish sentiment around the stock. And then for the high estimates, we can see that we have a 2023 estimate of $8.41 and then a 2024 estimate all the way up at $10.98. So a lot of positivity trending forward for the average estimate, and even for the high estimate, we see a lot of positive movement. And one thing that can help them hit these EPS targets is reducing their shares outstanding. And we've seen that trend over the last year or so. They actually went a year ago from around 2.746 billion shares outstanding all the way to now sitting at 2.614 billion shares outstanding. And that is almost a 5% reduction in their share count. We can see also that they're starting to get back to these numbers that they were in 2019. So we saw them actually issue a lot of shares over the last couple of years as the stock really ran up. And now that they're trying to get back to kind of growth, we've seen them actually continue to try and reduce their shares outstanding. So based off everything we've seen so far with their earnings being trending in the right direction, their balance sheet being in a very healthy spot, and their overall shares being slowly reduced out on the market, the only question left to ask is what is going on with the valuation. And when we look at Zacks, we can see that they have a trailing 12-month PE ratio of around 11. And based off Alibaba's historical valuation, we can see that that is significantly below where it's traded in the past. We can see numbers here for the last few years of trading anywhere from around a 25 all the way up to a 45 PE ratio. And recently, over the last couple of years, as we saw the stock price fall, we've also seen their valuation fall in a very massive way. It fell below 25 really for the first time in recent history back in 2021. And then ever since then, it has just continued to bottom out. And now we are sitting around between a 10 and a 15 continually over the last year. So what we can do with those metrics of valuation, we can come up with where the stock would go if it were to trade at previous points that we've seen at PE ratios of 25 to 30. So if the stock were to trade up to a 25 PE ratio, we could see that the price would move all the way up to around $190.11, which would be a 127.27% return based off the current stock price. And if the stock were to trade at a valuation of 30, we would see that this stock would move up to $228.14, which would be a 172.73% gain from the current price. In my opinion, Alibaba is in a great position to capitalize on a lot of strong tailwinds over the next couple of years. They're going to be comping against a lot of lower numbers. They also have the tailwind of China actually fully opening for the first time in the last few years, and the business is still set to capitalize on the growth that we've seen from China's economy. Overall, China has talked about trying to grow their GDP by around 5 to 6% this year. So there's a lot of positive things going on with the stock that I don't think are really being priced in yet. And also, I think there's a lot less downside potential to the stock than there is upside potential. So that's all my opinion. Just keep in mind that you need to do your own research. Make sure you are looking into these companies on your own before you buy into them. Your time horizon is also important. If you are retiring or need the money in the next year, then it's probably not a good spot to put it in Alibaba. You want to put it in something that's maybe safer, like the S&P 500 or bonds or whatever it may be. But for a longer time horizon where you're looking at maybe the next 5 to 10 years, I think, in my opinion, Alibaba is going to perform very well. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.